Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about State Street CORP quarterly report. State Street Corporation offers a wide range of financial products and services to institutional investors. These include custody, accounting, and fund administration services, record-keeping, client reporting, and investment book of record services, transaction management, loans, cash, derivatives, and collateral services, investor services, operations, outsourcing, performance, risk, and compliance analytics, financial data management, foreign exchange, brokerage, and trading services, securities, finance products, deposit and short-term investment facilities. The company also provides technology solutions through its State Street Alpha platform, which includes portfolio management, trading, and execution tools. Additionally, it offers investment management solutions across various asset classes, SPDR ETFs and index funds, defined benefit, defined contribution, and outsourced chief investment officer services. State Street Corporation's stock price surged by 28.52% in the past year due to a combination of strong financial performances, strategic initiatives, and investor confidence. Key factors contributing to this increase include strong earnings performances. State Street consistently beat earnings estimates, with adjusted EPS growth ranging from 17.7% to 27.5%. Significant asset growth. The company reported record levels of assets under custody and administration, AUC/A, and assets under management, AUM, reaching $51.7 trillion in AUC/A and $5.4 trillion in AUM as of September 30, 2025. Dividend increase in capital management. State Street increased its quarterly common stock dividend by 11% to $0.84 in the third quarter of 2025, demonstrating robust financial strength and confidence in future earnings and cash generation capabilities. These factors collectively contributed to a total return for State Street, STT, stock over the last 12 months of 29.71% as of late October 2025. The primary drivers of revenue growth for a company are largely attributed to management fees and servicing fees generated outside the United States. Specifically, management fees increased by 16% and 12% in the 3 and 9 months ended September 30, 2025, respectively, while servicing fees from international markets accounted for 48% of total servicing fees in both 2024 and 2025. Additionally, management fees generated outside the U.S. comprised 25% of total management fees in both years. These factors collectively contributed to a significant increase in revenue, with totals rising by $237 million in 3 months and $674 million in 9 months. Net income and profit margins overview. Between the 3 months ended September 30, 2025, and the 9 months ended, net income saw a notable increase of 16%. However, there is limited information on changes in profit margins. The growth in net income can be attributed to 2 key factors: an increase in management fees by 12% for the 9 months period, and a 16% rise in 3 months period, and a 15% surge in assets under management, AUM, over the same periods. These increases suggest that the company's revenue streams are expanding, contributing positively to its net income. The company is indeed generating positive operating cash flow, as evident from the total operating cash flow of $10.277 billion for the 9 months ended September 30, 2025. This indicates a healthy financial position and ability to generate sufficient funds from operations. Furthermore, the company's decision to repurchase $400 million of its common stock demonstrates confidence in its financial stability and commitment to shareholder value. Management's outlook and strategy overview. The company's financial summary highlights several key points regarding its outlook and strategy. Management is confident in the company's capital adequacy, having exceeded regulatory requirements as of September 30, 2025. The company also expects to recognize revenue from non-cancelable performance obligations over the next 3 years, with a significant contract valued at $2.11 billion. In terms of geographic expansion, management notes that servicing fees and management fees generated outside the U.S. account for approximately 48% and 25%, respectively, of total fees in both the 3 and 9 months ended September 30, 2025. Additionally, the company has a common share repurchase program approved by the board, authorizing the purchase of up to $5 billion of its common stock beginning in the first quarter of 2024. Overall, management's outlook suggests a focus on revenue growth, geographic expansion, and strategic capital allocation through share repurchases. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company declared significant dividends per share for the 3 months ended September 30, 2025, totaling $840,000, with a larger total of $674 million declared over 9 months. Additionally, the company repurchased common stock worth $400 million, with an authorization to spend up to $5 billion on share buybacks. This indicates that the company has indeed paid dividends and bought back shares as part of its financial strategy. That concludes the financial summary for State Street CORP. Feel free to comment below, and I will be happy to answer them when possible.